Right, ladies and gentlemen, as I'm sure you realize, this is a quite exceptional year for the simple fact that there are so many elections, very important elections, not least the election that's coming up in 2 weeks' time, which is a great source of unsureness, as we found out yesterday during the discussion. So we thought, just to shake things up, I'm sure in every country that you watch television, you've seen these election debates. So we thought that we'd improvise the format here this afternoon in Madrid by having a kind of election-style cube format. You know, we've put the people under fire. So we're going to be doing this as an election debate. And we will be talking about the dynamic changes unfolding in the insurance market landscape, tailored to address the evolving needs of all of your corporate clients. So let's ask our candidates, our experts, onto the stage. Please give a big welcome for Chris Dempsey, Mukadder Erdönmez, Lorraine Stack, Xavier Véry, and Dirk Vogler. Are you all ready for this? All right. What we're going to do is we've chosen this format because we want you to debate with each other. So we're going to talk about different themes. And I must say, for the moment, you don't know the questions I'm going to ask you. You know vaguely the things we're talking about, but you have no idea exactly to whom I will be asking the questions. But first of all, I'd like to have a general answer from all of you. Let me introduce you, maybe first of all. Chris Dempsey, you're Senior Vice President, EMEA Division Manager at FM. Mukadder Erdönmez, you're a member of the Executive Board of HDI Global. Lorraine Stack, you're Managing Director, Risk Management Leader, Europe at Marsh. Xavier Véry, you're the CEO of APAC and Europe AXA XL. And Dirk, you are Chief Regions and Markets Officer, and you're a member of the Board of Management at Allianz Commercial. So, first of all, just a general question to all of you, and I'll start with Dirk, just in 2 sentences, in 30 seconds, if you could. How would you define the current state of the relationship between insurers, brokers and risk managers? Just in 2 or 3 sentences. I'll start with you, Chris.
I think if I defined it, I would use 2 words. I'd use collaborative and I would use committed. And I would use those terms for the current state of the relationships, but as importantly for the future need of the relationship to be around those 2 defining terms. Because I think when you look at the theme of the conversation we'll have and FERMA and the conference today, we're all in this together trying to solve a lot of very unique challenges. And I think those 2 things are really important to the relationship.
Okay, Mukadder.
When I looked at it, I first started to think about, okay, how should I express that? And Chris already took one of my words, it's collaborative, right? We are looking at the risks and the changing landscape in a very collaborative way. We're changing a lot. And my second word would be like biased. Why biased? Because I truly believe through our roles, we're looking to find the best solutions, but maybe through a different lens. And at the end of the day, the roles which we're having as brokers, risk managers, and carriers are slightly differing when it comes to the risk. So from that point of view, I would say like we're collaborative, trying to find a solution, but partially we're biased.
Okay, Lorraine.
Alex, I would say symbiotic. So we challenge each other, we lift each other up. We need each other as well. But broader than that, the insurance ecosystem, which is more than just us, our clients, and it's everyone at this conference. The ecosystem has never been stronger. We've never had more tools, we've never had more data to help us, and we've more insights than ever. And it is very, very important because we are living, as we will learn, in consequential times, and we have important things to do.
Xavier.
I would use productive partnership. Productive because collaborative has always been used twice, but productive because we are here to make sure that we find solutions together. We are all facing new risks, and the overall, I would say, concept is to make sure that we address them. And we are all participating to finding the answers to those emerging risks. So productive partnership.
Dirk.
It's difficult for me now. All the good answers are gone already. So I would rather say probably drinks and party. If I look at what we did yesterday evening, I think that was a great start to really building a foundation. I think most of us know each other for a long time, but in times of changing markets, evolving technology will be super important in the future, that collaboration even tightens. We work close together on all the evolving trends, form partnerships, and solve the problems out there jointly. So yesterday was a good start.
Right, thank you very much. A round of applause. They've started off with some dynamic replies. Right, now the idea of this is that we're going to take on the big themes, the themes that we've been talking about since yesterday. We don't have time for everybody to give their point of view on every question, so what I'm going to do is we have 4 minutes, 2 times 2 minutes, and I'm going to choose who we answer. We'll have 2 people for each theme, but I'm sure you'll get a fair crack of the whip. But first of all, let's start with the obvious thing we've been talking about, climate change. And the simple question I'd like to know, do you think that the insurance industry needs to change its underwriting practices, we talked about that yesterday, to better support companies in their transitions? Xavier.
Thank you very much. So starting this debate is not easy. I do believe that we need to evolve, that's for sure. So we are facing, in fact, new risk. Again, AXA published recently our emerging risk perspective. Climate change is the #1 for 3 consecutive years. So that's a fact, it's here. Are we equipped to deal with it? Probably not completely today. Why? Because we need to address immediate needs and we need to plan with our clients long-term solutions. So do we need to change the way we operate? I think we need to evolve. We need to include much more data, much more modelization. We don't have sufficient models to cover all the risk, and we don't basically spend enough time planning for the investments. Again, most of our clients have their existing assets. Their existing assets are a reality that needs to be properly controlled, properly managed, and properly protected. But more than that, they are investing. And this part of the investment is something that we need really to focus further. And on that road, we do have a lot of, I would say, contribution to be able, in fact, to provide to clients, to our insured at the end of the day, by shaping a little bit what could be alternatives, what could be scenario for the future. So 2 big challenges, the immediate answers to the immediate needs, and on that front, we are providing, I think, collectively a very interesting and very good support. I think that we've been improving significantly with regards, for instance, to the claims management, but also to the overall global protection that we are seeing. But more importantly, investing further in bringing solutions, making sure that we contribute to defining what will be the shape of the assets for tomorrow.
Okay, thank you very much, Xavier. Dirk, I saw you were nodding your head, but is there anything you disagree with, or would you like to add to what Xavier has just said?
Xavier, I'm friendly. I probably rather add to what you're saying. I would, though, disagree with 1 or 2 points. I think we can do a much better job. So if I look at our actuaries and how we run our models, it's still a lot really backwards looking, right? So we as insurers, at least we at Allianz Commercial, we are proud over 100 years history, and we look at all this backwards looking data. I think that will not help us so much when we look at the future, when we look at what's going to happen in the next years. So really more predictive modeling, taking up data trends, like we work together, for example, with the Institute of Climate Change in Potsdam, Germany, to really understand what's going to happen in the future and to adapt our models. That's point 1. The second point is I think we need to be much faster than we were in the past. If I think how long it takes us to develop a new insurance product, wow, ages, I would say. So really working with endorsements, working with alternative risk transfers is going to be another topic, I think, which should be much more in the focus in the future. And last but not least, it's what I said at this beginning, not drinks and party, but partnerships. I think we as an insurance industry invest not enough in innovation. We are really poor in investing in innovation. If I see all the tech companies out there, they invest factor 10, factor 20 in what we do. But there's a lot of room for cooperation. So we, for example, cooperate with companies who help our clients really in understanding carbon offset strategies, what they can do, what their carbon offset strategy currently is delivering, and what alternatives would be to be even more efficient. So mostly agreeing to what you're saying, I hope.
Yeah. Okay, so a few points on working faster and partnerships. I'd like to talk about litigation now, obviously an important point, especially related to climate. Is the insurance industry providing enough solutions to protect executives? Mukada, let's ask you that question.
Well, we started about thinking, how can we actually increase the awareness? Because one of the key things which we did find out in our conversations with our clients is that the risk awareness about climate litigation is not very high, right? 80% of the executives are not really perceive it as a risk. Wow. And against that background, we were very surprised that when we looked at the US, currently there are more than 2,000 files and cases ongoing in the US related to climate litigation. And if you add that what is going on in Europe, you see that there is a clear risk that this is happening out in the market, and there's a risk for all companies, but also for all executives. When you look at the targets of those files, you clearly see that it's more like governments and corporates and less the executives. So at this point in time, the D&O policies are not triggered that much, but if you look at it, it's a rapidly changing environment, and that is something where we believe it's just a matter of time. So at this point in time, when we look at it and we see like there's not so much awareness of it, there is really an ongoing trend of increased litigations in the US and in Europe. If we consider the class action environment which we're seeing in Europe evolving, this will increase. So first point is for us, we need to raise the awareness. We need to make executives aware of that there's a risk out there if they don't behave in the right way and their companies don't adopt the right policies. Secondly, I believe we need to look at coverages. Currently, the D&O coverage is not really geared up to that. So let's look at if there are gaps to it. And maybe also looking at like climate risk-related policies, that is another step where we believe like we can help executives and corporates really to protect themselves against these kind of litigations.
Okay, thank you very much. Lorraine, you were listening, you were nodding, yes. But maybe you have some things to add. Do you agree, or what would you like to add?
Well, you know, as a broker, and as the only broker on the panel, I feel obliged to challenge my colleagues up here. So, you know, as from a brokerage perspective, the D&O markets are fine, right? All is rosy at the moment compared to where we were in 2021 and 2022. But D&Os, and in fact, we're pushing for coverage enhancements, such as enhanced entity coverage, right, for companies that display good ESG hygiene. But we see things on the horizon, Alex. You know, we see increased accountability for ESG commitments, regulatory changes coming down the pipeline, and shareholder activism as well. Now, the recent Hague ruling against Shell, which is about insufficient decarbonisation commitments, that has a significant, you know, impact on directors and officers' insurance. And we're seeing a noticeable increase in change litigation exclusions, particularly affecting our energy clients. So this is slightly worrying, there's a feeling that the insurance industry is just waiting for the wave, and you mentioned it actually, so waiting for the wave of ESG litigation. And this worries us because, you know, we know when this happens that insurers will be more cautious, imposing exclusions on climate-related risks and limiting potentially coverages for ESG compliance for Ds and Os. Overall, we understand that our clients need to be, you know, to strengthen their ESG commitments, but we also need our insurers to adapt their policies. And each insurer as well seems to be imposing their own exclusions, so there's wording issues as well. And lastly, what I would say is, you know, we remember 2020 and 2021, so sustainability is key for us in the broking community on behalf of our clients.
Okay, thank you very much. Let's move on to another question which was raised yesterday. How can the insurance industry address the mismatch between short-term policy renewals and the obvious long-term nature of climate-related risks? Chris, let's hear from you on that one first of all.
Wouldn't have guessed you were coming this way. No, I think it's a great question, and it has come up. I think, obviously, just FM as a property monoline insurer, we certainly look at a long-term view in terms of how you protect against climate-related risks, just like many of us do, right? So while it's true that most insurance policies renew on an annual basis, organizations, I feel, that take that longer-term view of protecting against forecasted risk and climate risk are certainly better prepared to make sure that they're making those decisions around risk transfer year over year when they think about the retentions that they want to take on. I think when you look at just the rise in climate risk exposures and the natural catastrophe activity, look at 2023, right? 2023 was yet another year where we had north of $100 billion of insured loss, property loss alone. That's almost the third year in a row where that statistic has happened. And that's property alone, insured only. There's a lot of the component of that being uninsured risk. So I think some of this goes back to what we started with the first question in terms of how can we proactively, insurers, brokers alike, work with our clients to identify and forecast those future climate risks? How can we take those proactive measures to look at how secondary peril events such as hail, wildfire, flooding, convective storms are changing? How are the insurers or how are experts modeling those and looking to protect those, protect against those into the future as you start to make capital investments? I think to me that certainly approach works well in terms of the annual decision that buyers have to make in terms of renewing a policy and coverages.
Xavier, I noticed you were nodding a lot there. Are you in broad agreement?
Well, I think that, Alex, I mentioned that in my introduction. It's all about making sure that we address the short-term needs of clients, but we participate to the long-term planning of basically their developments. So it's about data, it's about modelization, it's about making sure that basically we contribute further, we design models that are more appropriate to have different kind of discussions with our clients. On the very short-term basis, obviously, we do have some mechanisms that everybody knows, long-term agreements, things like that, but this is a very, very short-term answers. So what we really need to invest in, and this is what we all do, we do it through AXA Climate ourselves, we do it through our risk consulting, we do it through our digital commercial platform, it's really to develop ways to analyze the future, well, to analyze and to move towards more prediction. And you've mentioned it, we have a tendency in our industry to look back, but basically now the challenge is to predict. It's modelization toward prediction in order to be able to contribute to the thinking of where the investments should be, how does this shape the future of the investment plan of our customers. So I'm completely aligned, I'm going to save minutes for the rest.
Okay, well, we can take that on to the next question, which is a very important one. We also covered quite a lot yesterday, the decarbonisation targets and how do we meet these. If I could ask you, how can the insurance industry innovate? What are the innovative solutions that can be used in terms of the discussion about decarbonisation? Let's take this one to Dirk.
Yeah, innovation is super important. And I said before, I think we need to dramatically improve on that. Sometimes I think we forget, we don't forget, but we underestimate the importance of claims here in this scenario. So how can we really think about using spare parts, using the circular economy, supporting the circular economy much stronger in our efforts. I can give you, I'm from Germany, so I can give you quite a recent example from Germany, what we are doing there on the motor side. What we are doing is actually trying to use spare parts, obviously super certified and everything, in repairing cars after accidents. And this is something I think where we need to open up to much more in the future to think how we can support this sort of circular economy. The second thing I also mentioned at the beginning would be for me underwriting. really looking into the future, trying to use predictive modeling much better than we did in the past, and also by collaborating, by finding partnerships out there who help us in the transition journey, because as you said, there will be massive investments going into this transition in the future, and we need to be able to support that with creative solutions.
Mukada, do you have any creative solutions to suggest to us?
Well, maybe not the creative solutions, but I often start thinking about this, saying like, how great would it have been if we would already be living in a decarbonized world, right? How much energy, how much efforts would be set free to really drive change in the organization for the next stage of society and planet. But the reality actually looks different, right? If we look, we're not only halfway about the 2030 target of the EU of having only 55% of the carbon footprint of the years of 1990. So there is still a long way to go, and a lot of companies working to really reduce their carbon footprint in many different ways, in the production, in the travel, in the use of e-vehicle fleets. So a lot of this is already happening, and we look at it from a perspective that we say, like, we obviously want to help companies to really drive this. And we look at it from two different angles. One angle is what Chris already mentioned. We have a strong commitment to risk assessment and risk consulting about how we can help companies in their production process and their process to reduce their carbon footprint. That is one thing. But on the other thing, we are working a lot on new products. For instance, we have HDI enablers in Paris who are working on parametric solutions for these types of risks. So there's a lot going on when we look at it, not only in the field of risk assessment, but really also in the field of new products, helping clients to move down that path. That can be carbon offsetting insurance policies, that can be sustainability, supply chain sustainability policies. All of this, we are working very much on it. And you raised it a little bit earlier when you spoke about ESG. So it's not that we're waiting on the ESG topic, right? We deliberately have now built up a unit in HDI Global, which is dealing exactly with these type of risks and building solutions for it. So we're looking forward to collaboration.
Okay, thank you very much. That's some questions on climate change. Let's move on to new technologies. And I'm going to start with a specific example about the lessons, possibly, that we all learned from the CrowdStrike outage regarding the resilience of cyber insurance policies. Lorraine, would you like to take that one on?
I'll get it started anyway. So CrowdStrike, what did it teach us about the resilience of policies? Well, let's start with what it taught us, which is not to be complacent. So, the outage was not malicious. It was it was resolved relatively quickly. Not too much impact in the insurance industry, so that's great. But the next one is coming. It's just showing how prevalent and how aware and alive companies need to be to their cyber risk. Now, and we shouldn't be considering things like cyber or CrowdStrike as an exceptional occurrence, which it isn't. So when it comes back then to policies, we need to make sure that our policies, such that they are, and as far as the insurance industry can cover us for things like this, that the policies are suitable. So we need to make sure there's vendor risk management, there's vendor inclusions in it. But there's a lot of policy wordings that can help. But it's not just about risk transfer, right? This is all about good cyber hygiene, resilience, having incident response and recovery. And these are things that, my colleagues on the stage here are very much in the insurance risk transfer area. But they also, and we do too, provide advisory support to clients, and that's so important. But having a cyber policy often is a good indicator, it's a good hygiene indicator, because it actually requires you to think about these issues. So, but it's constantly, we require constant evaluation and update and collaboration with your brokers and your insurers to make sure that the coverage is adequate, but not just relying on insurance.
The next one is coming. It's like what Carl Bill said yesterday about the next pandemic is coming. The next cyber outage is maybe coming. Chris, would you like to add anything to that?
Yeah, I think those are very good points made. I think when you look at CrowdStrike, the takeaway for me, certainly, when you think about cyber risks, is that wasn't necessarily a traditional or standard cyber event, right? It was a mistake that was made that unfortunately had a significant impact to the interruption of data and regular business operations. And I think what it does highlight, to Lorraine's point, is that these events can happen. They can come from a number of different directions. So beyond the policy, beyond finding a way to transfer that risk, it's the proactive way to prevent against it and prepare for it that makes a big, big difference. When you think about cyber risks in general, about 80% of those have been proven you can protect against them, right? You can prevent these attacks just with good cyber hygiene, to the same point. So I think certainly organizations that spend a lot of time educating their employees on the importance of recognizing cyber events, organizations that do look at it from a risk transfer perspective and understand what is my policy covering me for, whether it's property damage or BI related to those types of data breaches or corruption of data, I think is important. And certainly the ongoing process of risk assessment. How are you as an organization managing your information? How are you managing that information security system? How are you taking it a step further for those that are in manufacturing, thinking about industrial control systems? The interconnectivity of a lot of equipment and machinery that is driven by data that certainly is susceptible to some of these particular events. So I do think it's a two-way street, if you will, in looking at what can policies do, but also how can you proactively take some action to be prepared for an event in the worst case that it does impact you.
Now, this is a subject we've slightly touched on, but I'd like to get your point of view. Interests me especially as I'm a journalist. The question of fake news and misinformation. How can insurers effectively protect companies against reputational damage, and that leads to financial loss too, because it's becoming more and more of a problem? I mean, what's happening in the American elections, just to take one case in point, Mukader. How can we fight against this?
When you look at it, and that's a question actually I ask the audience, right? How often have you realized or come across in the last 12 months about a piece of information or a picture where you start thinking about, that sounds odd, it's strange, right? And for me, that happens more and more. And you mentioned the presidential elections in the US. The amount of misinformation, disinformation is tremendous. And that is also shown in the Global Risk Survey of the World Economic Forum, which actually puts misinformation as the biggest global risk for the next 2 years. And for the next 10 years, it's within the top 5. So that is really a topic where we as an industry need to think about how we deal with it. A lot of that risk is already covered in policies like the D&O policy, like a PI policy or cyber. But it's never actually really touched upon, and it's either we're silent or there is no clear coverage for reputational impact on it. So I don't believe that an industry that we have already an answer to it. And I don't believe that this is something which we as an industry can have an answer to it from a carrier perspective. It needs to be something we develop together with brokers, with clients on an individual basis to see like what is actually the profile of the client, what is the target a valuable target, and a lot is also like geared towards like the cyber industry. When you look at it, and you mentioned that, a cyber attack usually comes at places where it's the easiest to get into a system. And it's similar with misinformation. Either you're an easy target because you have a certain position, or you're an easy target because you have a valuable asset. From that point of view, we have to work together to solve that problem.
Xavier, you were looking a little bit pensive while Mukada was talking. Is this a problem we can actually get to grips with, or is it just got too big? It's on our phones every day.
So I don't think it's too big, but I think that the overall topic that we are talking about right now, and it was true for the climate change as well, we are touching the systemic nature of those risks, and that's clear. Now, as an industry, we are not here to protect. We are here to cover for the financial losses. So we need to make sure as well that we are all clear about the role that we are playing in the overall ecosystem. Our role is to to cover the financial consequences of an issue. In this role, What we need to do is to work with our clients, with our brokers, with all the ecosystem to make sure that there is, as much as possible, deep analysis of the current situations, proposals on how to improve the quality of the risk, and then coverage and incident response mechanisms. So that's what we are here for. And to your point, when you were saying that basically we need to move towards a wider approach of the risk and not only an insurance approach of the risk, we are completely, and I think we are all aligned on this topic. But again, we are here to cover the consequences. We are not here to protect. The protection is the role of the organizations. And this is very important. We are here to make sure that we share our experience, our expertise, that we share what we have seen in other contexts, so we bring added value for clients to be better aware about their risk and how to protect the potential emergence of an issue. Is this, and I think that this is a very, very big transformation of what we are doing. It's true in cyber, it's true in reputation, it's true in climate change, it's true in the consequences of AI, it's true of all the emerging risks that we are seeing right now.
It's interesting your slight Freudian slip with protect, because my next question is about protecting data assets, and how far can insurance policies do that? Chris?
Yeah, I think this particular topic is very similar to some of the things that we've talked about, right? I think when you look at insurance and risk transfer, certainly you can provide some type of coverage for data, right? First-party data, second or third-party data. But I think it comes back to the reputational risk of that, right? The lack of protecting and proactively protecting data in the event of a loss of that certainly creates that reputational risk that we've talked about already. We've all known organizations that have been in the news where they've lost sensitive data that's made it out into the public. And you think about the reputational risk and certainly the downfall that may have had certainly on the bottom line or the financial position of the company. So I think it very much ties into one of the questions earlier you provided or you asked Alex was, how do we look at protecting the data? How do we look at being prepared for those cyber risks? So I would reiterate exactly what I said before in terms of being prepared to recognize those, certainly protect the information that we're having, and make sure that we're not certainly just relying on data protection from a policy perspective.
Okay, Dirk.
Yeah, I would agree here again. Just to give you some numbers, whereas physical risks in the past were really what we as an industry were insuring, today some of our companies, the value of their data assets far exceeds our physical risks, and so I think in the future we need to put much more emphasis in protecting data assets. If I look what happened in the past years, ransomware attacks dramatically increased in all industries and were surely one of the main parts for data losses and issues with data. Also, the Allianz Risk Barometer shows now for a couple of years in a row that the fear of data breaches is on top of mind of most of the risk managers, not only in tech companies, but also in very traditional companies. And I think where we can really help our clients is with prevention measures. So what we, for example, do is we partner with a company called Coalition. They have thousands of cyber engineers really working on a daily basis, daily attacking the companies we are insuring, daily looking for weak spots in their defense, and in the very instance where they detect something, inform the company where they see issues and what needs to be done in order to recover quickly. And this is something I think we can further foster. And then if something happened, I think it's again not about coverage, but about fast recovery programs. So really do some modeling around if something happens, how do you react fast? Who can help you to restore data as fast as possible?
Okay, and the last theme, obviously massively important, AI. How can the insurance industry help enterprises to protect themselves, but also to seize the opportunities in the way they use AI. Lorraine, let's hear from you.
Well, what a year, or what a couple of years it's been on the technological front. ChatGPT, of course, was launched in November 2022, and since then it's become the fastest growing consumer software ever in history. And so the implications of this are vast, and of course we're living them all the time. I'm sure many companies like my own have developed their own in-house version, and this is making our lives and our jobs much easier, which is fantastic. Some of the risks, though, Alex, have been around for a long time, right? AI has been around for a long time, so the risks such as data security, misuse of technology, that's addressed within the insurance industry. AI itself is not the issue. It's probably more about generative AI, right? So, and then there's two ways that this can evolve. There's emergent capabilities where the generative AI can learn and start to develop capabilities in areas it wasn't originally intended for, and that means a lack of predictability. And then there's technological convergence when it starts interacting with other interfaces, and then there's all sorts of complexities. So do we address this through insurance? Is that the right way to do this? I think the consistent theme I'm hearing, I think we're all hearing across the panel this evening, is insurance is not the answer to everything. Risk transfer is not the answer to everything. It's really important that there's good risk management internally. Certainly, the insurance industry has a lot to teach us in terms of modeling. You have a lot of capabilities that can help us and our clients understand the risk, and that's where I think the importance of the insurance industry will come in.
Xavier, you just have to accept that you can't insure against everything, especially AI, because it's going to get round it.
Well, first of all, I completely agree that it's not only about insurance, and that's all what we tried with our own words to convey today. It's all about predictive, it's all about risk engineering, assessment, prediction, incident management, and of course there is an element of coverage which is there. So the answers for tomorrow are clearly answers where we are in a position to combine all those elements to provide the best potential solutions to the clients, from assessing the risk, improving the quality of the risk, managing the consequences of any event, accident, incident, whatever it is. Now, AI, it's evolving. AI is here. So we will have to deal with AI. We will have to deal with generative AI. And by the way, we've just launched yesterday, in fact, an endorsement to our policies to cover in specific cases, specific elements which could trigger a risk on using generative AI. So we are at the forefront here. We innovate. We believe it's important. We believe we need to bring solutions. So I'm not worried about what will be, in fact, the solution in the long term. We are working on it all collectively. It's here, it's a risk that exists, it's a risk that will stay for a long period of time. It's here forever now. So now the question is not about neglecting it, it's not about denying it, it's all about understanding it better, making sure that we provide solutions which are not only insurance solutions, but which are comprehensive solutions to address a comprehensive risk.
It's true that AI is it's mind-blowing. Just a personal example, I don't know how many of you use CapCut. I've just spent the last 3 weeks learning how to use CapCut on my phone. It's just incredible what you can do. You can change people's faces, you can change what they say, you can get artificial presenters. I also went to see the ABBA thing in London a month ago, which is AI, and I was thinking soon we'll be having conventions where you have an AI presenter with holograms doing AI, and you tell them basically what the message is, and they'll bring it out. I mean, we're actually there. You have ABBA singing in front of you. Maybe at the next forum, we're going to have an AI convention. It goes that quickly. Anyway, that's my little journalist thing for this. I have 2 more questions now about the vast question of what we've been talking about, everybody here, the geopolitical tensions in the world which are escalating at the moment. So the question is the political risk insurance market evolving at a sufficient pace to support companies' export activities? Chris?
So, yeah, I think, certainly as globalization of industry continues, more and more organizations become more exposed to those geopolitical tensions, depending on where they have their locations, what their organizational footprint looks like. So there's no question that it's a risk today, and it's a risk that will continue into the future. I think very similar to some of the other exposures that we've talked about, I think to me, this ties very well into organizational's ability to understand their global supply chain. Yeah. The complexity of the supply chain, when you start thinking about locations in emerging markets, when you start thinking about expanding into territories that one could argue are more prone to geopolitical risks, and being able to know how that's going to impact the business and how that's going to impact revenue. You talk about exports, how does it tie back into the coverage of the policy? And I think there are tools out there to start to use that as a buyer when you start thinking about understanding those geopolitical risks, right? The resilience index that's out in the public market that allows individuals, insurers, buyers, brokers to really use that as a tool to think about country by country across the globe, what are those geopolitical risks, climate risks, resources, et cetera, available, or how are those types of factors going to impact the ability to do operations there. I think the other thing, just from a policy perspective or managing risk transfer, is it starts to highlight the importance of globally consistent insurance programs. It really starts to highlight the importance of having that type of risk transfer protection in place that's consistent across those locations, that can be localized, can have a single point of interest or a single point of contact to address any type of issue or exposure or loss that you may have.
Mukada, would you like to add anything to what Chris has just said?
Well, I would like to start with what Jane said a little bit earlier in the previous presentation. She said, like, we actually arrived in a normal state, which is a state of turmoil. The last 40 years were exceptional, right? They were exceptional with regard to stability and predictability. And we now arrive again in a world which is more bipolar or more challenging. And if you allow me a forecast, I personally would say that the next 10 years are going to be extremely challenging with every aspect we're seeing, geopolitically, from society, from a technology perspective, but particularly from an economic perspective. Because if you look at the top three foreign trade players, which are the US, European Union, and China, you see a trade war going on, right? You take the European customs regulation, which is now starting to put customs on Chinese e-vehicles. You see, most likely when Trump is elected, a back to America first policy. So there's a lot going on with regard to that. Is political risk coverage the right answer? Not always, because as we said, we're looking at financial losses, which we're going to transfer. So we will not have the answer to everything. Do I think that the current products are suitable? I believe, as a starting point, yes. But we have to evolve like the risks are evolving. And when I look at the entire landscape, I totally believe, and that is maybe also a summary of all the things that have been said, we only will master the future if we're working together and handle those challenges and things to come together. Because I totally believe risk assessment can only be done properly if there is exchange on information, on know-how and expertise between brokers, clients, carriers to find the right solution.
Okay, my final question is about the evolving international sanctions and regulatory changes. To what extent does the insurance industry be in a position to be able to help clients address the challenges posed by these dynamic geopolitical developments? Let's go with Dirk.
Yeah, that's a good question, and indeed to what we discussed here before. On the one hand side, exports are going up, supply chains are getting more and more complex, and on the other hand side, we see more and more crises around the world. The Middle East is evolving super fast. Let's see what that will bring in the next few months. We see the conflict China and Taiwan, where we don't fully know what's going to happen. So quite a dynamic development also when we look at the sanction regime around the world. Obviously, we can't sort of protecting our covers against sanctions. But what we can do is, again, support you, because also insurance companies, we have very delicate sanction checks. So with our broad network, we look really region by region and understand what's the sanction regime, what do we have to do, and how can we support our clients also understand the different regimes and what they can do. We can also support our clients in running scenario testing. So what if the conflict China-Taiwan really breaks out? What if the crisis in the Middle East becomes even worse than it is already today? So this is something I think not only we as insurance companies need to do in order to be resilient for the future, but where we can help our clients to become more and more resilient.
Okay, I'll finish with Lorraine.
Oh, okay. So once again, as a broker, and with all due respect to my partners on the stage, I would be remiss if I was not to point out on the risk transfer side that, you know, there's interpretations that are being applied inconsistently around the world, and this is causing some confusion for our clients, right? So I'm just laying that out there, and that's it. We all have our issues, but that's one that's certainly causing problems for us on the brokerage side. But look, risk transfer aside, the other ways that the insurance community can help is risk assessment and mitigation, as you said, country and market intelligence support. Yes. You know, you guys know what's going on down on the ground. You can absolutely provide that information to your clients, and then compliance support as well. But innovation in the area, actually, with the use of AI, is really interesting and quite important. And I'll give you two examples from Marsh & McLennan. One, we recently created an AI solution to help map risk and support real-time risk management. That's Centrisk. I'm not here to sell anything. I'm just pointing to the solution. And then another thing, Marsh & McLennan were very, very proud to have supported Ukraine in launching a data platform that allows insurers, investors, and governments to analyze war risk in the country. And as it turns out, through the data and analysis, you know, things are much better in the Ukraine than we thought. So, so these kinds of sort of innovative tools can be hugely beneficial to the community, to the ecosystem.
Thank you for that solution. I'm sorry if you were frustrated because you had a few points to add to the questions, but I think you handled that situation. You generally did not know who I was going to ask the questions to, so thank you very much indeed. I promise you they are not avatars. It'll be a long time, I think, before we actually get AI people who can react like that. So stay where you are for a minute, but a big round of applause. Thank you very much indeed to our tremendous panel. You can tell us what you thought about the panel. It's always very useful for Tifem when she organizes the forums to know what you thought. So you've got a QR code. You scan the QR code. You select a plenary room, and you will have 5 questions. We now have a break, but after the break, we have a fantastic session. We'll hear about the results of the Global Risk Manager Survey, followed by a testimonial from Markus Rehm with I don't know how many gold medals he's won at the Paralympic Games in Paris, and he'll be coming here to give you his particular analysis of risk and what his experience can bring to bear with the industry. And we also have the Best Exhibition Awards and some closing remarks. So quick break, and see you back here in a few moments. Thank you very much again, and once again, thank you to you all. Thank you.